I was completely wrong on Netflix. I have a massive loss on Netflix, and I'm going to show you guys in this video what actually happened to me on Netflix and how I am going to recover from this loss. I believe that the premium cycle is the best strategy for long-term investors to make money in the options market. And I want to be very transparent about my investments and also show you guys the trades where I am in a big loss and where not everything is going perfectly fine as planned, because that is a big part here on YouTube, to be transparent, to be real, and to also show the losses and not just all the trades where everything is profitable. So, as you guys can see here, I actually sold two Netflix cash secured puts on a $91 strike, and I got assigned on two $91 strike cash secured puts. And I sold another one on $90 strike, and I also got assigned. So overall, I got assigned on three cash secured puts on Netflix. And as we can see here, Netflix actually dropped to around $82. So I'm in a massive loss at the moment, in between around $90 to $91, all the way down to $82. Down here, I have attached a screenshot for some proof. I want to be the most transparent options trader that you guys will ever find on YouTube. And down here you can see a screenshot of my portfolio, which I'm publicly sharing here, where you can see that I'm owning 300 shares of Netflix, and I'm currently down 7.6%, which is a little bit over $2,000 in an unrealized loss, guys. Okay, so this is very important to understand at this moment. This is not a realized loss, this is an unrealized loss. Okay, so I am down on this position, but technically nothing else has changed than for an investor who just bought Netflix and it dropped. Okay, so I'm even in a better position than an investor who bought Netflix at $100, because that person would be all the way down from $100 all the way down to $82, and I am only down from around $90 to $82. Okay, but let's speak the facts. I am down 7.6%. $2,000 in total, and I'm going to show you guys how I am going to recover from this position and how the premium cycle is the perfect strategy for long-term investors and for people who have hard-earned capital to invest for the long term, to not burn themselves or liquidate their accounts, and how to recover from this and come out with a massive profit. So, what am I going to do now with this position in Netflix, which is down? Well, the first thing I'm gonna do is I'm just going to absolutely relax, guys. Relaxation is the most important part here, okay? The premium cycle is designed to own a high quality stock, and assignment is not a mistake, okay? So, as we know, we never want to trade the premium cycle for just premium chasing. So we never want to choose an underlying stock who has very bad fundamentals, a breaking company, because then we would be in a very bad position if we ever have to own the stock. And all it will happen is just drop and drop and drop and never recover from that temporary loss. Okay, so relax, guys. It's not a realized loss. And the number one rule to choose a very strong underlying stock is the most important factor. So I am still long-term bullish on Netflix. I still believe in Netflix. I still believe that Netflix is going to go up again. And later on in this video, I'm going to show you some technical analysis why I believe that Netflix is gonna go up eventually by a lot. And I'm very sure that one good earnings on Netflix is going to be enough that the stock will eventually rise again. So what am I gonna do now? Well, I'm selling covered calls above my assigned strike price, okay? So I'm basically saying that I'm willing to sell Netflix again at a strike price which is going to be above the price where I originally bought Netflix, which was around $90, okay? The number one mistake that I see traders doing is that they get greedy and they want to sell covered calls below their strike price, for example, at $85, but they bought at $90. So if the stock ever rises again from $82 above 85, they end up being assigned at $85 and they will have to sell their shares then at a strike price which is below their price where they bought the stock, so they will realize a loss. So it is very important to always sell your covered calls above your assigned strike price, okay? Also, it is very important to know exactly and always recalculate your actual cost basis of Netflix, okay? So what do I mean by that? We have to know at which price we actually own Netflix, because yes, originally we got assigned at $91 strike price on our cash secured put, but I'm going to show you that calculation why that is actually not true. I basically own Netflix at a much lower price because we have to calculate in all of our premiums received from the cash secured put and our covered calls. So when I sold the $91 strike cash secured put on Netflix, where I got assigned, I originally collected $1.50 in premium or $150 in total, as we know that options come in a 100 pack of shares. So we have to subtract the $1.50 from the $91 strike, as we can see here in this calculation. So my actual cost basis right now is $91 strike minus the premium received, which I received upfront when I sold the cash secured put. So my actual cost basis is only $89.5, which is much better than owning Netflix at $91. We know that the current price is trading around $82, so I'm already much closer to the current price where Netflix is trading at if I subtract the premium received so far, okay? And every single time I sell a covered call, I will eventually lower my cost basis even more, okay? So let's say I sell one covered call and I receive $1 in premium or $100 in premium. I can subtract another dollar from this cost basis, so then I would own Netflix at only $88.5. So you guys can see here that this strategy is actually amazing because I can just continue lowering my cost basis even if the stock absolutely does nothing and just stays around $82 for a long time. I can still generate an income on this and even lower my cost basis where I own the stock. So a very important rule, once you get assigned, which we need to know that this is not a mistake, it is not a big problem in our portfolio. It is important to know that we don't panic and don't get greedy, okay? Because if I bought Netflix around $91 strike, I could sell covered calls at a $92 strike and still keep a little bit of capital appreciation in between there if I end up getting assigned. So I can take the capital appreciation from $91 to $92, which is just a little bit, but the premium which I will receive is going to be a lot, okay? So I can do that, but I believe in Netflix so much that I think Netflix is going to go up even much higher, maybe to $95 or $100. So I don't want to cut off my capital appreciation here, so I'm willing to sell covered calls way above my assignment price, which was 91. I'm currently selling them around $96 to $100 strike because if Netflix ever rises, I want to also make a large capital appreciation here. So I'm willing to take a little bit less premium, maybe not $1 at the moment, more like 50 cents or $50 for the whole options contract, but I want to make sure that once it rises, I'm going to benefit from capital appreciation, and I'm making an income right now, which is lower than if I would sell closer to my strike price, but I am making an income while keeping that possibility to make another large profit from capital appreciation. Because I believe that Netflix is going to recover eventually. So if we jump over here on TradingView, I can show you guys what I'm seeing at the moment. So at the moment, I like to look at the RSI from Netflix, which shows if the stock is oversold or overbought. And as we can see here, so there's a general rule. Usually an RSI below 30, which is here, indicates that the stock is massively oversold. So it basically went down. And if a stock is above, or if the RSI is above 70, that means that the stock is massively overbought. Okay, so if it is up here, it's most likely to come down a little bit, and if it is down here, it is most likely to come up a little bit. Okay, and as we can see down here, the RSI is currently around 32, and that is relatively very, very low if we look here. So that's one indicator for me why I believe that Netflix is going to recover and the stock price is going to rise. That's why I say don't be greedy at the moment, rather collect a smaller premium, but make an even larger profit in the long term or in the next few weeks possibly, okay? And be patient a little bit. And don't forget, the trade is not dead. The trade is also not a loss yet. We are even generating income. It's just not as much as before. So greed would be the wrong indicator, or would be the wrong emotion here, okay? As you guys can see, this was my mistake. I believed, you can see this line here, I thought that this would be the support line of Netflix, okay? I calculated this as my support line, but as you guys can see, Netflix broke through that support and dropped even lower to the $82. So I believe the lowest point where Netflix is gonna go to is going to be around that $75 price down here, if we will ever drop as low. But another very important indicator which you can see here is the Bollinger Bands, and the Bollinger Bands basically say if the price touches the lower line of the Bollinger Band, it is most likely going to rise to the middle or above once again. And as we can see, just as the RSI, the price is all the way down here touching the Bollinger Band, so it is most likely that it will go up. Also, if the Bollinger Bands get very narrow, as you can see here, the distance from here to here is very, very narrow. And usually when the Bollinger Bands get very narrow, there's a big price breakthrough coming up, okay? As we can also see here in the past, it's getting very narrow here. It's going down, 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 and then it is shooting up all the way from 75 to nearly $100 up here, okay? And I'm seeing the exact same pattern here, that we are getting very narrow here. It is getting much more narrow. So that's another indicator and another reason why I believe that Netflix is going to shoot up eventually to the hundreds again, okay? Now, do I know if that's going to happen next week or next month? I don't know. But the most important thing here is I don't care, because as long as it doesn't rise, I can just continue selling my covered calls and just collect the premium after premium after premium again and again until the stock eventually rises and it will reach my strike price and I have to sell my 300 shares of Netflix, okay? And then my maximum profit is going to be all of my premiums which I have received during this process, plus the capital appreciation. So as you guys can see, this is a very, very attractive strategy for long-term investors who want to protect their capital, to make massive gains while completely forgetting about any type of day trading or other activities that will just burn your capital. I love the premium cycle, and if you want to also implement this trading strategy on your capital, you can join my community with the link in the description of this video. And in my community, I have a full course on the premium cycle, which is going to teach you the strategy and the functions behind this strategy, so you have a deep understanding of the strategy. And also, I am sharing my live trades with my community, so you guys can benefit from that as well. So to anyone who is interested in my community, I currently have a deal running on my community where you can have a lifetime 50% discount on your subscription. So if you guys are interested in this strategy, click the link in my bio and I will see you in my community.